Hello, my name is Connor Lambert.
And I'm Sam Nussbaum.
We're presenting to short sell the Boeing company. Some general information. So they operate in the aerospace and defense industry. They're headquartered in Chicago, Illinois. Their current price is $186.04. We estimated that it will drop down to $106.53. The Boeing company is a globally reaching aerospace company that engineers and manufactures commercial airplanes, space systems, and defense products for commercial and government customers. It was founded in July 1916 in Seattle, Washington, but now they're headquartered in Chicago, Illinois, with the majority of its workforce and facilities located in Washington, although it is incorporated in Delaware. The company is included in the Dow Jones Industrial Average and is the third largest defense contractor in the world, the largest exporter in the United States by dollar value. Boeing offers products and services such as military aircraft, satellites, weapons, electronic and defense systems, launch systems, advanced information and communication systems, performance-based logistics and training. They currently employ more than 140,000 people in the U.S. in over 65 other countries. Boeing also earned a total of $62.2 billion of revenue in 2021. So to break down these sales by geographic regions, the United States accounted for 62.7% of their sales, while Europe had 14.3%, Asia with 9.4%, Middle East with 7.5%, Latin America, Caribbean, and other regions with 2.2%, Oceania with 1.8%, Canada with 1.6%, and Africa with 0.4%. Within the market, it is currently the largest aerospace company and leading manufacturer of commercial jetliners, defense, space, and security systems. It also is the service provider of the aftermarket support in the world. Boeing is also America's biggest manufacturing exporter and supports airlines in America and allied government customers in more than 150 regions. Within the shareholders, about 0.10% of the shares are held by insiders, while 54.51% are held by institutions. 54.56% are held by float held by institutions as well, while Newport Trust Co. owns 7.4% of the top institutions, and Vanguard Group owns 7.3%, and BlackRock Incorporated owns 5.2%. Additionally, the market capitalization of the Boeing company is $109.835 billion, with an enterprise value of $174.5 billion, and within the past year, they have had a low stock price of $167.58 and a high of $260.48. For their dividend yield, free cash flow yield, price to earnings ratio, price to book ratio, and return on equity, they all have non-applicable values due to the fact that they have negative numbers, which yields for uncalculable results.
Our investment thesis for shorting the Boeing company is based off four primary factors, being decreased defense spending, the crippling economic climate, rising competition in the industry, and quality control and safety issues that have plagued Boeing. So, in terms of defense spending in the United States spent 11.3% of its GDP on the defense industry back during the Korean War in 1953, but currently we spend as low as 2.7% of our GDP on the defense industry, which is a record low, and as 42% of Boeing's revenue is dependent on defense spending, that is pretty significant because 84% of that revenue is from the United States Department of Defense, which is spending at a record low. The crippling economic climate that has plagued the world recently has had a very big impact on Boeing. So year-over-year inflation was at 7.9% in 2021, which is a record level. There is a 70% increase in oil prices last year, which are plaguing airlines, one of Boeing's main customers, and making it more difficult for them to afford Boeing's products. Air traffic is still 27% lower than it was in 2019, again, plaguing Boeing's customers. And supply chain shortages, specifically chip issues, are making it hard for Boeing to get what they need to manufacture their product. Rising competition in the industry has also stunted Boeing in recent years. In the 1980s and 90s, Boeing held as much as 75% of the market of large commercial aircraft, but in the last 2 decades, Airbus has actually overtaken them in market share, and although it has been close since then, the COVID-19 pandemic and issues with the Boeing 737 MAX have plagued Boeing. So in 2021, Boeing delivered 340 aircraft compared to Airbus's 611, so their market share has been on the decline. Quality control and safety issues have also been plaguing Boeing. So the Boeing 737 MAX, which was supposed to be a fuel-efficient answer to competitor Airbus's A320neo, ended up having software issues causing two of the planes to drop out of the sky and crash due to a faulty MCAS sensor. So this was Boeing's fault, not the airlines or the pilots. Two planes just fell out of the sky, and 346 people lost their lives because Boeing was focused on cutting costs, and this came at the expense of product quality and human lives. And worldwide, at one point, the entire fleet of 737 MAXs, which is currently Boeing's flagship product, was grounded.
Within the industry, business travel, which has long been supported by the titans of the commercial aviation industry, have become practically non-existent during the COVID-19 pandemic, and it will likely never return to levels previously seen. Mark Manduka, a managing director in equity research at Citigroup in London, estimates that until the pandemic hit, about $300 billion of the global industry's $800 billion of revenue came from the corporate travel. It represented about 50% to 70% of its profit basis. In an industry becoming vastly more dependent on leisure travel is significantly more risky, as leisure travel is much more cyclical than business travel, leaving airlines at the mercy of consumer spending habits. A relatively positive outlook on business travel is that even if some of those business trips slowly pick up, he believes business travel will shrink by about 25%, with short-haul flights recovering by 2023 and long-haul flights only by about 2027. The necessity of traveling to conduct meetings and do business that airlines thrived on when ordering planes decades ago is going by the wayside, with the popularity and ease of using virtual platforms such as Zoom and Teams to meet. Boeing's customers in commercial aviation face an uncertain future, as does Boeing. Boeing still fails to have a competitive edge over its competitors such as Airbus because of their high cost production, inefficient scale, lack of economic moats, and their safety concerns. In 2021, they spent $65.188 billion on total expenses. Because of their overspending and inefficient use of money, as reported by Seeking Alpha, who claimed that they essentially wasted $60 billion on unnecessary expenses, they reduced their profits as well as waste their free cash flow, which could have been increased the return of investors.
Boeing's financials are also concerning. Pre-pandemic, Boeing did $101 billion in net sales in 2018, and in 2021, that number only rebounded to $62 billion. In 2018, they were able to convert approximately 10% of their net sales into profit, but in 2021, they took a loss of $4.2 billion on their $62.28 billion in revenue. They've also taken on massive debt during the pandemic, which has not led them to profitability. In 2018, Boeing only had $6.5 billion in debt relative to their $101 billion revenue, but in 2021, Boeing had over 8 times as much debt and did not turn a profit. Their free cash flow has also gone negative over the course of the pandemic. Our target price for Boeing is set at $106.53, which is based off a discounted cash flow or DCF analysis, which assumed that Boeing's revenue will rebound slightly this year to around $83 billion, beating their numbers from 2019 and 2021, but not matching pre-pandemic levels of 2017 or 2018, and that their revenue will continue to climb to previous levels, reaching around $90 billion in 2023 and $98 billion in 2024. But past this point, it will struggle to increase revenue in uncertain, highly competitive markets, and the revenue will stagnate around $105 billion. We also used a discount rate of 9%. Boeing is a company with a long history, and they should be able to conservatively borrow around this mark.
Currently, Dave Calhoun is the CEO and president, while Brian West is the CFO and Naveed Hussain is the CTO. Although they have reputable backgrounds with various companies, they're fairly new and do not have the experience that many other companies have. Yet again, Boeing comes up short within its ESG. Dennis Muhlenberg was let go in 2019 due to 2 plane crashes that resulted in numerous deaths on board of these planes. Because of this has brought a lot of negative attention to the company. Additionally, the carbon footprint of these jets is not sustainable in order to preserve our environment. They have set goals for 2030 in order to reduce their emissions, but they are not farly developed enough in order to improve the environment. Additionally, there's a lot of lack of employee diversity within the company. As a result, white employees are overrepresented because they make up 69% of the workforce.